market that is seeking direction. Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Wednesday, the 18th of August. I have no trend, I have no trend seems to be this market's mantra at the moment. It would appear as though every time we have positive news for the market, we have negative news that follows, which pretty much negates all the positive news. That seems to be the major theme for August. Take a look at today, for example. The good news was industrial production in the U.S. was up. Good news, home builders' confidence in the U.S. is also up to a 5-year high. Now the bad news, Staples net falls 32% on weak international sales. Bad news, slipping international sales zap Deere third quarter earnings. You know, I could go on, but I think you get the picture. Eventually the stalemate will be over and the market will resume in a direction for more than one day. We are relying on our trade triangle technology, as we know mathematically that the odds are on our side when we use this approach. I hope you were able to catch yesterday's video, as I highlighted a major stock and I stepped you through every signal since 2004. The results speak for themselves. Now stay tuned today, as I have a special surprise for all Market Club members that will come at the end of today's video. Now let's take a look at the charts and our very own trade triangle technology and see what's happening in the markets. So let's go right to our portfolio. Here's the S&P. You can see plus 70. Like watching paint dry, but that's way the market is going right now. You can see for the past 1, 2, 3, 4, 5, 6, 7 days we've gone nowhere in this market, and that eventually is going to be resolved. But the two levels to watch today in my mind is the 1400 level. If we close below 1400, now I know it's around 1405 right now, but if we close below 1400, that'll be the first time in 7 days the market's done that. Something to pay attention to. Also, the PSAR, which is this little purple dot on your screen, is coming in today at 1,396.54. If we hit that level, then I think we'll see this market come down to the 1370 level, which is the midpoint, which is not unusual for this market to do. But let's just see how that plays out for the rest of the day. So let's go to our next market. That's going to be the euro. The euro, as you know, we were very negative on the euro around the 124 level. And again, we didn't think it was going to sustain over 123.5. And we traded down to as low as 122.63. Now it's interesting because the PSAR comes in at 122.54. That's a little purple dot right there. And if we hit that, obviously that's going to be a signal this market may have a little more downside. But nonetheless, we have touched the top of the Donchian trade channel. We came back down, touched the middle, and we've come back up, and now we're coming back down. Where we close this week is going to be very, very important, because if we close lower this week, I think below the 123 level is something, it would basically confirm a negative engulfing line from the previous week. One thing that I was looking at also on this market was, let me just put a close only chart, and I drew this earlier, and this is what I came in with. Let me just put a trend line on here, so just right here. And so you can see if we close below 123 today, it's going to break that line, and that to me would signal a move probably down to the 120.50 area, maybe the 117 level, which we talked about as a target zone. So nonetheless, it looks to me like this market's rolling over to the downside. And of course, you've got Greece next week coming in, or not coming in, or kicking the can down the road. Who knows what those guys are going to do, but eventually Europe is going to say enough is enough, Greece, get out of here. So let's go to our next market, and that's going to be the crude oil. And let's just put a little chart. Crude oil, basically for the last what, 9 days, 10 days, it's just been moving flat around this 93, 94 level. And again, the PSAR comes in there today at 92.34. Now we traded down to as low as 93 today. Now if we break a new low below 93, that's something. But nonetheless, this market's sort of just biding its time. I'm a little bit concerned. As we have mixed feelings on that. Our monthly is down, our weekly is up, and our daily is down. So you've got this plus 55, which is exactly a trading range. Nobody can get excited on the upside or the downside at this point in time. Kind of like the mantra for the entire markets, because we've seen no direction in this market for the first couple of weeks of for the month. So let's just go to our next market. And that's going to be the Dow. Now the Dow is something to look at. On the Dow is probably this low day right here, which was coming in at the 13,094 level. Now this PSAR, which is the little, let me just draw that in. That comes in today at 13,112. So let me just show you where that comes in on the Dow. This is something that you want to pay attention to. Here's the dot we're leaving. So at 13,112. The market's currently trading on the Dow at 13,172. So another 60, 70 points lower in the Dow today could spell really a lot of problems for this market. So I think what we're doing, we're rolling over again to the downside, and I think we're going to test this midpoint of the the Donchian trade channels, and even possibly go down all the way down here again. It would not be out of the realm of possibilities. So let's see how that plays out for the rest of the day and the week, of course. So let's go to our next market. Yeah, the next market is going to be the gold, and as you can see, gold has actually had a nice bounce from the lows that we saw today right here, and that's on the mid channel. We talked about the mid channel yesterday, and it's come down, popped up. But the key thing to watch on gold here is going to be the weeklies, because if we close lower for the week than the previous weekly close, it's going to probably confirm a negative engulfing line, which would not be necessarily a good thing for this market. But generally speaking, we're just in a very broad trading range with a slight bias to the downside with a -75. Again, the market looks to be a little bit defensive. It looked great up here, like everyone's getting excited about the gold, but this is a solid resistance line, and we've got good support coming in around the 1590 to 1580 level. So I think that's pretty much what's happening in this market at the moment. So let's clear that screen off and go to our next market, and that's the NASDAQ. NASDAQ's actually putting in a little bit better performance today, and of course that's probably with Apple and also with Google. But nonetheless, this market it touched outside of the top of the Donchian trade channel, came back under. The day is not over with yet, so again, if we close, I would say close lower than the opening yesterday, which is opened at 3,032. Hold on, let me get that right, because that doesn't look right. It opened at 3,032, and we're currently trading 3,030. So let's see how, I beg your pardon, it's 3,017. The close is 3,017. As we close below 3,017, that's going to be an indication that we'll probably see a little more pullback from current levels. But the PSAR comes in at around 3,000 today, 2,999. So let's watch that carefully. Copper, on the other hand, is not acting well. It's really, it rallied from outside of the Donchian trade channel up to the midpoint, came back down and sort of hovering around here, but it's lower for the week, and it does not look particularly good. And I don't think that's a good omen for the stock market. I think that's tends to be it's an industrial commodity, of course, and things are slowing down. You saw the Deere numbers, and also what's going on in China and the rest of Asia. So let's see how that plays out. But I would not be surprised to see this market go down to the 332, 330 area. We're not that far from the here and now. So let's hit our next market, silver. Silver's like watching paint dry. Trading range, same comments as yesterday, -55. Really, you've got resistance around the 2850 level, and you've got support at 27 and 2680. So that's pretty much where we are in the scope of things. One thing you did have a negative divergence, and I think that was something that maybe give you a little bit of a clue. But nonetheless, you can see this market really hasn't gone anywhere, and I would not be surprised to see another pullback. We're not quite oversold yet, but we're getting towards that level. So let's go to our next market. This is the Reuters Jefferies CRB index. And we've had a little bit of pop in the grains. I think soybeans are up over 2% today. Gold is a little bit higher, so we've a little bit of help there in the energies with crude oil, of course. But the market still looks a little bit heavy. We're in the midpoint here. And you can see basically we have hit the PSAR. The PSAR is above this market, so I would not be surprised to see this market move down to the 295 level, which is the lower end of the Donchian trade channel. So let's see how that plays out. But let's take a look at what we were talking about before, and that is just stay tuned, because I really want to show you something really special. We haven't talked about this, but I think I want to spend some time with you going through and sharing with you this really kind of very cool portfolio that is available to all members. So let's just, so here we are. This is our World Cup portfolio. And what I want to share with you is the results for the last 5 years. Now, we've been tracking this and reporting on this since this quarter, 2007 Q3. We started and we picked out these 5 markets: corn, wheat, soybeans, crude oil, gold, and the dollar index. Now, why do we pick these particular markets? Well, pretty simple. When we started this, we had no idea that we were going to have a corn drought in 2012. But what we did know that these are core elements right here. It's basically food, and we have to eat as a nation. So you're always going to have moves up and down. When I first started my career, I started at Conti Commodity Services in Chicago, trading grains, and basically food is an element that goes. We have to have food to live, and the world has to have food. So these have always had pretty big moves every single year, some years bigger than others, and I'll share with you those moves. Now, we also pick crude oil, and we pick crude oil very simply because of energy. We knew energy was going to be a big player in the future, so we want to have crude oil in the portfolio. So now we have 4 markets. Then we pick gold, and we picked gold for a reason. We were concerned about, obviously, the dollar. We were concerned about just inflation, deflation. So this is really your, let me just put this like this, inflation, deflation type protector. Lastly, we chose the dollar. We wanted to have a financial component. The foreign exchange is the biggest market in the world by far. It dwarfs the equity markets in the US, all of them combined, probably even all the world equity markets combined. It is a huge, huge market. Companies have to hedge themselves. People can speculate. The banks speculate, of course. But let's take a look at how this portfolio did collectively. So what we're going to do is combine all of these markets. And you can see in Q3, we came out with a gain of $31,000 on a $50,000 investment. This is how much it takes to run this portfolio. It's $50,000. And what you do with this, you actually deleverage it, which is even more interesting. Most people are concerned about leverage and commodities and so forth, but you're deleveraging using this program. Now, the next quarter, we came in with a gain of $30,000, giving us a total gain of $61,000. So that's a really great return for the year. That's about 120% return for the year. That's just in 2 quarters. We said, well, that's fantastic. But 2008 turned out to be the mother of all trading, because look at what happened in crude oil. And this is all trading one contract only. $16,000 the first quarter, just trading one contract. $31,000 the next quarter. $20,000. And if that was not enough, $40,000 in the last quarter of Q8. Now, we did lose money in Q9 and Q1 and Q2 of 2009 in this market. But having said that, it didn't matter because we made money in other markets as well. So you can see how this return here was somewhere like 500% for the year, which is phenomenal. Now, the next year, we still made money, but we just didn't make money as well as we could have. So let's take a look and see how that worked out. So here you have all the markets. The only thing you should be concerned about is losing money overall for the year. You're going to lose in quarters. You lost in the first quarter of 2009, you lost in the first quarter of 2010, and you lost money in the first quarter of 2012. Now, we've only just gone through the 2 quarters in 2012. We're not including the huge moves and money we made in the drought in corn, wheat, and soybeans, mainly in corn. But here's the key thing. We lost money in this first quarter. We made it all back and then some in the second quarter. So we made like 22%, 23% so far for the year in these 2 quarters, which is far better, and I think with less risk, in my opinion, than just trading in equities or other markets. Now, you look at the other markets here, you made money collectively for the year. Even though you lost in the first quarter, you made money. And of course, in 11 was an outstanding year. That was a triple digit return. I'm going to show you that in just a second. So let me just clear the screen for a moment. And let's go to our next market, our next illustration. Now this is the World Cup portfolio. So let's just go to our next illustration. I told you this would be something different. And here's the growth curve of the World Cup portfolio. As you can see, it's pretty steady, starting with $50,000 right here. Actually, we don't even put that on the chart. We have not included, if you put this on the chart, we'd be over this level here, over $500,000. So it's not on the chart, but you can see it's the big gains certainly in 08 and 09, steady gains through 011, and then another big gain. Now let's look at how this worked out. In 2007, 123% return. 08, 500%. That's the huge moves we saw in crude oil, and I'll show you how that worked as well. In 09, well, a little disappointing because you had such a big return in 08, but 48% is a ton of money. 35% in 10, and just when you thought those triple-digit returns are gone forever, bingo, in 2011, 186.79%. And as I said, in Q1 and 2, we're up 22%, and that's not counting the big grain moves we've seen. So again, this portfolio has consistently made money. It hasn't consistently made a consistent return. It has spectacular returns at times, and other times it just has good returns. So, but it's totally diversified. And what this is our World Cup portfolio, and this is available to members. We give you the signals every single day. We have a special section for our portfolios. We give you these signals every single day. Had you followed this religiously, you would have had these returns. So let's clear the screen off, and let's go to our next slide, and you'll see what that is. So here are the returns. Basically, you can see the whatever could be abnormality here, 500%. But having said that, these are still incredibly good returns. And if you average this out, it's over 100% a year, trading 6 markets that you just don't have to worry about. You put the orders in and you forget it. It's really that simple. Now let's take a look at our markets. Now here they are. And I want to share with you just how this works. So here we are, we have the 6, it's color-coded. So here's the corn right here, it's blue. And you can see that's kind of like right here. Okay, and then you have the wheat, which is the next one, which is right here. And you see the green like here. And you can see also it had losing. You lost in those quarters. So that's something to remember. You don't make money every single quarter in every single market. We have one commodity we can say, look, you make money every single year in the market. It's just not realistic. But here's the big move. This is the big move in the crude oil, which is right here. That was we showed you the quarters, huge, that contributed to the 500% return, but we lost money in this quarter. Made it, lost money in this quarter, lost money in this quarter. So out of 20 quarters, we've had 7 losing quarters in crude oil. Excuse me, 3 losing quarters out of 20, which I think you'll agree is pretty nice. Now you have gold here. In gold, obviously, with a huge move up in 2011, that contributed to the return of, the 100% return, or the plus 100% return. And then you have the other markets, soybeans, obviously doing very well in 2011 and somewhat in 12. So again, by being diversified, and again, I'm going to write this down. This is the World Cup portfolio, and this is basically these are the 6 markets we have. This is all to do with food, This is energy. And this is inflation. And this last one is the dollar. So again, trading these 6 markets, you had returns on average over 5 years, over 20 quarters, never a losing year, on average of over 100%. So it's a fantastic portfolio for you to consider to be putting part of your portfolio, and not everything, but maybe a part of it to consider. We show you the results. You may want to track it on paper, see if it's right for you. But as a member of Market Club, you have full access to the World Cup portfolios. So anyway, that's just an idea that you may want to have. And also, if you don't have time for that, or you don't want to do that, it's not something you want to do, then you may want to just, now, if I can make this next slide come up. Hold on. Well, I guess it's not going to come up. But anyway, thanks so much for allowing me to share this with you. I think it's really a worthwhile thing for you to look at as a member of Market Club. And I'll see you tomorrow. Same time, same place. Have a great trading day.